Will interest rate hikes crash the housing market? Let's have a look. Hello everyone, Florian here, and welcome to another episode of HeiseSays. Grab your stein of coffee, let's look at this article, putting the question out there that we all want to know the answer to. So banks warn too many interest rate rises could crash the Aussie housing market. Oh boy. Now, for those playing at home, we have had interest rate rises. And I've got more updates of the bank continuing to increase their rates. Now, there's a few things at play. Some people are hoping, to be quite honest, a lot of people are hoping that the interest rates will go up so high that people will be forced to sell and we'll see a flood of properties onto the market as banks foreclose on houses. Property prices tumble and everyone can go and jump and get that bargain they've been salivating for. And, well, the other argument is, with this increase in interest rates, we're going to see increases in loans and a reduction in the ability for people to borrow. So the capacity, demand, will be reduced at certain levels as people's borrowing capacity slowly trickles down. So that could have a play on housing prices. But don't forget, we also have supply issues. There's still delays in projects all over the place. There's builders going bust left, right, and center, and the cost of builds is going to go up as people increase their prices to have buffers to protect themselves. Then, also, let's add another one to it. We've got demands for immigration and calls to bring more people into Australia, particularly skilled workers, to increase. I'm just waiting to see more articles for more university and temporary visas to get more people here into Australia to put extra demand on our housing. So, it's anyone's call what's going to happen, everyone. And remember, they can just change the rules whenever they want. So it's hard to make predictions. This is why when people are making these predictions of what's going to happen, we've got to see. And I mean, this could also just be a piece that, the media and the banks want to get out there to kind of steer and influence the political climate. Why do you think there were so many articles of property falling? Could that have been done to persuade our politicians to step in and intervene in the economy? Anyway, let's look at this. There are warnings that Australia's housing market could crash if interest rates rise too high after supersized increases in the past 2 months. Now, this does feel like supersized increases, but the cash rate's insanely low. Okay? It's because we don't really know high inflation. We're not used to it anymore. The Reserve Bank of Australia has hiked interest rates 3 times since May, taking it from a record low of 0.1% to a staggering 1.35%. The Swiss investment bank, UBS, has predicted interest rates will peak at around 3.5% in March next year, but said this will still hit the housing market hard. Well, let's look at some property asking prices. Let's look at capital cities asking prices. Let me refresh. Okay, we can see it's starting to dip from the peak. So we've got 1.2 in May, and now we're at 1.19. So it's gone down. All houses down 3.4. So yeah, is that the peak, guys? Is that the peak? And that's all capital cities too, from SQM. Anyway, remember, it's been insane. I mean, let's let me be selfish. Let's look at asking prices for Brisbane. Brisbane properties. Oh, there you go. Oh, we've peaked, guys. We've flatlined. What's happening? We've flatlined here. We're only at 800 grand for a 3-bedder in Brisbane. Let's bring up rents. Let's look at rents as well. There you go. Come on. Reload the page. Wait. Brisbane rents. There we have it. Okay, so there you go, 620 for all houses. That's still going up. So we have to keep that in mind when people are predicting a crash, because your yield's still going to be pretty good when the rents are so high. So let's keep going here. We still think market pricing of about 3.5% if delivered will likely crash housing and see the economy nearing a recession. George Theriault, chief economist of UBS, told The Australian. If interest rates were to rise to 3.5%, it would likely see the average variable mortgage rate hit a whopping 6% and could plunge the economy into recession, according to the investment bank. Well, let's bring up my Excel here, and let's see what that actually means in money terms. Now, I've got people asking me to upload this file. I don't know if I actually can, because it might be construed as financial advice. I can tell you the formulas here, guys. Have a look there, okay? That's the formula that you use to calculate your monthly repayments. That's it. PMT in Excel. Just type that in, and then you can do it. This isn't magic. This isn't that hard. Okay? So let's say if we have a average mortgage in New South Wales at 6%, you're talking a repayment of $4,712. And if they go from 1.99, which is the fix that a lot of us got in because we don't trust the Reserve Bank, that's a 60% increase. But if you go from, 2.5 or 3%, there's still decent increases, guys. You're talking for someone on an average mortgage, needing to pay $4,700 for a place in Sydney, and that's an average mortgage is not the cost of an average house. So that's well, actually, let's times that by 12, guys. Let's get that as a yearly cost. It's $56,000 in after-tax money you've got to find in your mortgage, as opposed to 1.99 if you did the same thing. There you go. Okay, so that's you want to be on good money to be able to afford that. And this is the thing. There are going to be some people that this won't affect. Okay, there'll be some people, couples, six-figure sums, good money, good earning well, that this won't hit them. Because we always have discussions and fear around housing and mortgage stress. And let me bring up this definition here, everyone. Okay, and we've got housing stress is typically described as lower income households that spend more than 30% of their gross income on housing costs. So it's lower income households. And there's a big difference there. I can't see my mate who's a radiologist who's renting a place like a resort would be affected at all with interest rates going up that much. It just means probably a little less discretionary spending or tightening the belt or something. That's what it's going to be. But someone who's struggling, who's just trying to get by week to week, who's living paycheck to paycheck, they're going to be hit a lot harder, and it'll make a bigger impact on their quality of life and their discretionary spending. So it's not going to be felt evenly in Australia, and it's going to increase the class divide. Anyway, interest payments across the economy next year for the household sector will close to double for now. There you go. We have never seen such a sharp increase in repayments. That really crushes household cash flow next year, and you could have cost of living issues. The average Australian homeowner could pay an extra $991 on their mortgage by the end of the year if the Reserve Bank passes on all of its predicted interest rate rises. The Australian Prudential Regulation Authority requires banks to stress test people applying for new loans by 3% above the current interest rate from November, but rates above 6% will be well above the test for millions who have taken out a mortgage earlier. Major banks such as Westpac and NAB have predicted interest rates will rise to 2.6% by the end of the year, while Commonwealth Bank has been more conservative, pegging it at 2.1% by the end of 2022. Meanwhile, ANZ has forecast interest rates to climb to 3.1% by February 2024. Rates were increased in May for the first time in 11 years in response to spiraling inflation, which hit 5.1% in the March quarter, setting off economic alarm bells. I mean, this is... How much of this inflation that we're seeing is due to declining production and increasing transportation costs due to things that aren't demand-driven? So how are they going to impact it? This whole bloody Keynesian approach to it is just such a stupid bloody mess. Oh, boy. Experts have explained the need for rate rises in more detail since then, saying the RBA is attempting to allow the economy to recover from the impacts of COVID-19, the war in Ukraine, the floods, and the energy crisis in Australia. So, Mr. Thorino, I'm sure I butchered that, said across the nation, house prices have been falling quickly in response to rising interest rates. Well, they haven't been falling as quick as they've been going up. He believes the RBA will be forced to cut interest rates again in the second half of 2023 to avoid Australia falling into recession, particularly as trillions of dollars belonging to millions of Australians is tied up in the property market. Well, that's where you put your money in Australia. You don't put it in a business because then you've got to deal with all the bullshit and it's just going to get harder. I mean, imagine if you were in an ACT construction business, there's a tender going out for a $60 million project that your state government is tendering out, Labor state government, and they've stipulated that it has to be 100% female management. And you're a bloke there that's built up your firm, you've got experience in these projects, and you're just now unable to submit that tender. Awesome. Isn't it awesome? You know, so why would you bother dealing with all that bullshit when you just stick it in housing, pretty much government backed, and just ride the wave? If you haven't seen that video, watch it. It's a rant, and it got me quite angry. I'm getting angry again just thinking about it. The house price outlook is at least 10% down over the next year, but to stop a large fall will require the RBA to shift their policy direction and start cutting next year. Well, is 10% a large fall? It's not really. I mean, if we have a look, how far back is that going to put us? How far back? Say 10%, we're at 1.9 million. You're talking 190, 200 grand. Okay, so we're going, what, February 2021? You have to think of these things and how much time you've lost. Last month, the Commonwealth Bank announced that house prices in Australia's two biggest cities were set to plummet by an alarming 18% by the end of 2023 as the effect of the rate rises take hold. The banks also forecast an 11% house price plunge in Sydney this year alone, with Melbourne property prices set to fall by 10%. But see, if you're waiting to get back in the market, guys, I'll turn that off, that's not going to make any difference to you, because people were waiting back in 2019 for a property price correction. It shot up 20%, and now it's going to go down 10%. So it's still going to not be affordable. If you want a real crash that will actually make it affordable to people, you want to see a 40% fall. I can't see that happening, because I can bet you a carton there'll be significant government and bank intervention. They'll change the rules. They'll just change the rules to keep it going. Because people here in Australia don't want a free market. They want a stable market. The skyrocketing cost of living, rising interest rates, a blowout in debt, and company collapses are going to combine to have a catastrophic effect, with more Australians likely to face losing their homes and falling into bankruptcy in coming months. Malcolm Howell, partner at insolvency specialist firm Jurish Sutherland, has warned. Yeah, well, we're going in a recession. We're going to have a real recession. We didn't have one before. We had one technically, but it was more a recession of people sitting on their asses at home and getting stimmy checks. This is going to be a real one now. And you got to feel sorry for Albo. He's going to inherit it. If we see the increase in interest rates go up too much further, that will put the pinch on a lot of families. Homeowners have also been warned to brace for a triple whammy of a third 0.5 percentage point increase in the cash rate next month amid looming price hikes for petrol, fuel, and vegetables. Oh boy. So, well, let's have a talk about this one. We've been discussing this for some time on the channel. We're going to see it'll play out across the different classes here in Australia. It's not going to be evenly spread. Particularly the civil servant and bureaucratic class aren't going to feel it as much as other people. Construction's going to get hammered, particularly in the residential sector. But even that, there's different sectors in construction that will feel it and won't. This whole thing's going to be a mess. We've got all these predictions of also house prices going down, But what about the things increasing supply? We've got unemployment at record lows, so there's going to be people lobbying for the government to bring more people over to address the skill shortages. Then by the time that actually happens, what will that do for housing demand? You've got more builders going bust, left, right, and centre, residential builders, so that means the supply is going to be constrained. You've still got more people building than in the past. It's dropped down. Approvals aren't as high as they were, but they're still up there. So we'll have to see, guys. I mean, think about it. We're seeing here predictions that interest rates will go up and housing will crash. How could the opposite happen? What could happen to increase demand to such a with suppressed supply to actually put a support level for housing or to actually lift it up? Let's just go completely contrarian. What crazy bullshit could happen? Hey, and don't forget, shared equity. Maybe they'll expand that. Mortgage Keeper was a joke I made. And shit, it could be reality. Anyway, for those of us that are doing it tough, you've got time to prepare. We all have to. Thanks for watching. Like, share, subscribe to the channel. Let me know your thoughts and opinions on this one. If you're a fan and want to help out, there's a few ways you can. You can financially support us via YouTube or Patreon, use our referral links, buy our merch, call us if you need an architect, and have a good day. I'll see you all tomorrow. Take care, guys. Bunnings sausages are up, but my Aldi coffee is still cheap, and 7-Eleven coffee is still $1. So it's all good. It's all good.